Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau. And on today's show, we're going to talk about big data and how the little investors like ourselves can utilize this data to find more deals. Or if you're a real estate broker, if you're a mortgage broker, if you're in commercial lending or commercial sales, if you're in the solar industry, roofing industry, this is going to be all about leveraging data to find potential clients. So this is relevant for this channel. I myself am an investor. I'm also in the mortgage lending business. So I need data for both of those topics. And I think you guys are going to find this very fascinating. Welcome to the show, Sean O'Toole from PropertyRadar. PropertyRadar is the property data and owner information platform that real estate and home service professionals depend on to discover new opportunities to grow their business directly using enhanced public record data. And let me just say, ever since I was really in real estate, I remember listening to Sean. So he's been doing data, this kind of data for years and years and years, at least 2007 and probably before that. And I remember he had a different name for a company he had prior to this because it was during the downturn of the economy. And I believe your backstory is you were a real estate investor amongst your, I think like a software engineer type of background or engineering, and you were buying a lot of properties, and that's how you came up and built the tool, and then you've grown it since. Now you realize big data is the way for businesses to capitalize. And so I'm excited to have you on the show to dive in on like how can we use data from like a real estate investor standpoint, but also how can we use data to like figure out trends in the market, like what signs that we should be looking for. And I know that you study this on such a huge level that you can bring so much insight. So welcome to the show.
Thanks, Beau. Thanks for having me. Great to be here and happy to tackle all that.
All right, perfect. So let's just maybe dive in about just a little overview of what PropertyRadar can do for people that don't know what it does.
Yeah, so I did start in tech and ended up after the .com crash, ended up flipping properties and discovered this gold mine in public records. So if you own a donut shop, right? Wouldn't it be amazing if you knew exactly how many donuts your competitors sold, who they sold them to, how much they sold them for? Could be tires, could be whatever, right? And that doesn't really exist for any business. But thanks to public records, in the real estate business, you can get, all of that, right? And you can know every potential customer by name. And that really blew my mind when I realized that way back in 2002. And I just went, wow, this is a gold mine and so few people tap it. And, and I've really been working at that ever since. Taking this data that's in public records, it's kind of hard to access. It's free, but it's kind of hard to access, kind of hard to use, and making it easy for folks to use that to find their best customers, understand those customers, connect with those customers, and build their business.
So are you in national now for all like real estate data in every state?
Yeah, we did start off on the West Coast, originally just in California. Then we started expanding when we were Foreclosure Radar. So we did start in the foreclosure space, kind of through the whole foreclosure crisis. And then just a year ago, actually, we went when we finally got national.
That's awesome. Because I live on the West Coast, but I'm buying in Pennsylvania, and I want to pull data in Pennsylvania. So that's good to know. And I did realize that you have way more tools than I remember. I went back through and I'm like, I can't believe you have like GPS, you have like everything I could need is there now. So I'm like, oh, it's kind of a no-brainer.
Yeah, customers love me and hate me because I'm always changing and adding stuff. And it's like, we can't keep up, slow down. But yeah, if you haven't looked at the tool even in a year, it's there's a lot of new stuff there and a lot of changes.
So I know you don't have a crystal ball, but what is the data telling you right now about the real estate industry? Like, do we really have that bad of a shortage, or is there something we're missing with what's going on right now?
Yeah, so we definitely overall, big picture, right? Like every market is different. Let me just start that, right? So what's happening nationally, what's happening in major metros may not be happening where you live. So just keep that in mind. But big picture, we're not building enough to keep up with demand, right? And that's been a problem now for too long, and it's continuing to be a problem. So we have a lack of supply. We've had a lot of people reassess where they want to be with COVID. And so that's caused a lot more transactions in the marketplace than really we've seen in a long time. So very good for everybody in the marketplace, mortgage and realtors and the rest, lots of churn, transaction volume. And I expect that will start to slow down, especially because prices have gone up so much, that it makes it a little harder to make that move, right? But we still have not nearly enough inventory. One little cautionary note though on inventory, right? So you get something like the pandemic, and maybe you had multiple families living in the same dwelling. They will want to separate, right? And multi-generations will want to separate, and that creates more demand. And that's something I think we've seen over the last couple of years as well. That can work in the reverse. Like, we thought there wasn't maybe enough housing in the foreclosure during the foreclosure crisis, but we saw this massive contraction in the number of households because in financial distress, parents move in with kids, kids move in with parents, they move in with grandparents, et cetera. And you can get contraction of the number of needed households. But big picture, I'm very bullish on housing because of the lack of supply.
And will you give like an example or two of how some really niche marketing that PropertyRadar can provide data on? Like, if I'm a real estate investor, let's just use me as the kind of what I'm looking to do. I'm looking to buy duplexes and fourplexes throughout the state of Pennsylvania. I'm looking to find landlords that might be retiring, that might have a large portfolio that I might be able to buy multiple properties. So are we able to sort and actually pull owners that own multiple properties, 2 to 4 units? Is that a pretty easy, doable thing with the technology?
Yeah, I think, especially for newer investors, a lot of folks have been used to buying lists, right? And so you buy the absentee owner list, or you buy the duplex list, you buy the fourplex list, right? You buy a list and it's pre-compiled and it's ready to go. You can get all of those lists from us, right? But we don't really sell lists. Instead, we have this incredible list builder that has 250 criteria. So in your case, right, I could come through and say, I want duplexes and fourplexes. I want perhaps, let's just start with that. Actually, duplexes and fourplexes in the metros or areas in Pennsylvania that you feel good about, right? You talked about retired folks. I want to come back to that one. And you talked about folks that had many. So we'll come back to that one. I would create that list first. How many are there total, right? Duplexes and fourplexes. And we just know, and it's just a good rule of thumb, and this may not be exactly true for duplexes and fourplexes, but roughly 5% of properties sell each year, right? So your total opportunity bucket is 5% of whatever that number would be, right? And then you're trying to buy off market, perhaps at a discount. And so that's going to be 10 to 20% of those. So take 10% of 5%, 0.5% to 1% of the number of total things. That's your target market, right? So that's the first thing to understand. Like, is there a big enough market to do what I want to do? My guess is there probably is. Once you have that list, we make it really easy to take that list and break it down into sub-lists. This is where you can really start to differentiate. So if you look at all those duplex owners, you picked out 2 things where some might be a little different. But there are other things too. There's folks that maybe are using a lot of leverage. There's folks that own free and clear, right? There's folks that have owned for a long time. There's folks that have owned for a short period of time. And you can start making additional lists of that top group based on all of those things. So we do have age. So you can say, okay, I want duplex owners over the age of 70, right? And try and quads and whatever, right? So now that's a good group because typically after 70, you're a net seller of real estate over the coming years. You can also go in and say number of properties owned. And so you say, I only want folks who own more than 5 properties, own more than 10 properties, and it'll only show you those. Now, not all those properties may be duplexes, but you can see who portfolio holders are versus single unit holders are, right? And by breaking that list down, you can start to think about the needs of each, right? We had a great conversation last night at a real estate investment club, and the guy who runs that club really believes strongly in being a good landlord, right? Really taking care of his tenants and building relationships and that kind of thing. And I asked him straight up, when you sell, are you going to sell for the highest price? He says, no, I'm going to sell to the person who's going to take good care of my tenants. And I'm going to sell at a fair cap rate where I know that investor can make money because I care about my investor community. So, that's certain type of messaging you need to do, which is different than the messaging you're going to do to the person who just wants maximum dollar versus the person who's in distress. So how many of those duplexes and fourplexes are delinquent on their taxes? How many are in foreclosure? How many have vacant landlord mailing addresses? So lots of ways to break that down that you can then turn that into specific niches. So you could make just that one list you suggested, but I'd actually make the big list first, and then I'd make a dozen, or so sub lists. And then you'd stack up the ones that are vacant, in foreclosure, and tax delinquent, right? Like those folks are almost sellers for sure. And I would knock on those doors probably first.
And the
Some people call that list stacking. We just call it criteria because you don't have to buy 5 lists and stack them together. You just add the criteria. Sorry.
Yeah, no, that's amazing. And I think the nugget I really took out, I took a lot of nuggets, but these landlords that have owned these properties for 30 years and they have relationships with their tenants and things like that, they're not really about squeezing the last penny out of the sale. They're really about like, hey, I love my tenants. They've been good to us. They're concerned about their well-being. And so I like how you brought up the positioning of the messaging to those, because I know a lot of investors that have gotten a really good start by buying complete portfolios of 10 or 20 or 30 houses from a landlord that's retiring. And I see that as a huge opportunity to this day, that there's so many people that are getting up in age that are like, okay, we've owned these properties, we've made our money, and let's leave a little bit of meat on the bone. So for me, that's kind of where I want to focus. And I always interview people. I have a little bit, I want to like kind of ask questions I want, but I know it's useful for people that are going to watch this and listen to this, because this kind of data is not just for real estate people, like mortgage brokers and things like that. It's for any like business owner. I mean, what are the trends of business types that you're working? Are you working with more solar companies now? I'm just curious on like what businesses are coming into PropertyRadar now, and what kind of growth is there?
It always surprises me. We get a lot of like nonprofits looking for high net worth folks, people buying, multi-million-dollar houses for cash because, and that want to get them into the local giving. So we do see a lot of that. But I'll just, to give you an idea of how diverse it is, I'll just tell you a little story about, we have a little local charter aircraft company here in Tahoe, right? And because it can be brutal to drive up from the Bay Area to Tahoe on the weekends. And so they had this billboard about halfway up the drive about where stuff gets really hard. And it said, if you'd flown with Mountain Lion, you'd already be there, right? Brilliant advertising, right? And you're sitting in your car stuck, you're looking at this billboard and going, yeah, you know what? I want to fly. I don't want to do this anymore. However, the owner of that company said, well, I want to find people who have expensive homes in Tahoe, expensive homes in the Bay Area, right? And have a lot of equity in both, right? And I'm going to market to those folks. And he put together a really nice brochure, put it in a big envelope with a handwritten letter to each one of those owners. Every single customer he had, totally made his business, came from that letter. He said he didn't get a single one from the billboard. The billboard was costing him $3,000 a month. And so he took down the billboard and used us to build his entire charter business. So it is a wide variety of folks. Majority of our customers are real estate investors, realtors, commercial brokers, mortgage, solar, roofing. What most of our customers have in common is if you sell somebody a roof, you can't sell them another one tomorrow. So you have to be constantly out there marketing for new customers, right? Sell somebody a house, you can't sell them another one. You list somebody's house, you can't list another one from them, right? So some referral and stuff there works, but if you want to have a really good pipeline of customers, you got to be constantly doing outreach and marketing to find your next deal.
And your tool integrates with different services. I mean, like if I build this hypothetical Pennsylvania list, I could skip trace, I could get phone numbers, I could get email addresses. Probably like
you don't have to skip trace. So we've already matched them. We've already done all the skip tracing. They're already built in. So, a lot of these other tools, you build a list and then they send it off to a third party to get phone numbers and email addresses. There's some problems with that. One is, let's say you want to make 200 phone calls. In our system, you can add a criteria that has a phone number, right? And you're getting only records that have phone numbers. With the other companies, you have to buy a lot of records and then see how the match rate comes back, and you're buying records that don't have phone numbers because you have to buy the records, then skip trace them, and you're wasting money. And then the other thing is we're able to do a much better job on matching. So if the property's owned by the Sean P. and Marina Motul Trust, and I send off that owner name to a third party skip tracing, it doesn't know what to do with that. Well, we have what we call our trust breaker, where we take Sean P. and Marina Motul Trust and we say, oh, that's Sean O'Toole and Marina O'Toole. And then we can match that to phones and emails. So no skip tracing in our system. It's done already. They're all matched up, much better match rates.
So what tips do you have for somebody that's using your service? Because like I've always wanted to do direct marketing and I kind of like jump in, then I don't go full tilt. And I think you see that a lot with people, right? Like it makes sense. Like who wouldn't want to use PropertyRadar, right? It makes sense. But I think it overwhelms people. So like on this list I was talking about doing, what would your step 1, 2, like after we sort and segment the list, am I doing is the highest and best use of my time or one of my assistant's times, the phone, text, how do you layer the messaging for real estate investing per se?
So this is where it's still hard, right? And I'm not going to be the get rich quick, it's easy guy, because I just don't believe that. Our customers are the folks that are really successful, and they got really successful by doing the hard work. So here's the hard work. It's fairly simple, it's fairly straightforward, but here's the hard work. So you have a thesis around duplexes and fourplexes. That's what you want to go after, right? You build that list, you segment that list and understand it to say, oh, there's a lot of people that are over 70, or there's no people over 70. So my whole thesis won't work. I need a different strategy, right? And you come up with that. The number one thing to do, hard to do in a pandemic, and you can't have a VA do it. You can't outsource it, right? Unless you have really the right talent, is you really need to start ideally with knocking on doors. Here's why. When you knock on, not in a duplex, you're not necessarily knocking on the tenant door. You need to knock on the owner door, which may be different. But when you talk to somebody in person, you learn a lot more. We learn a lot more by having conversations with live human beings, even over Zoom versus just a phone call. We learn a lot more because we read facial expressions. We understand how what we're saying is impacting that person. And why that's important is it allows me to fine tune my message, right? And so whenever we start at this, our message is going to be terrible. And we're going to have very few people that are receptive to it. And each door you knock on, your message gets better if you're paying attention and you're learning. Each phone call you make, your message gets better. Now, that's the hard work. You have to do it first. You have to go do it yourself for a little while. And people are like, oh, I don't have the time. Well, then you're not ever going to be successful. Don't bother. Please don't sign up for my service, because I want people who want to be successful. And being successful takes some hard work. So that's what you got to do up front. having a VA in the Philippines, make those calls. They'll get some insights, but not enough, right? You don't have to do it forever, though. You're going to have to do it until you start to get a message that works and you understand what your potential clients need. Then at that point, you can bring in the VA. So I always like to say, perfect world, you door knock, at least 10, ideally 100, somewhere in that range. And you'd get a lot of doors slammed in your face. You get a lot of people angry. You'd feel unsafe maybe occasionally, right? But you're going to learn so much that way. And then you should make phone calls, at least 10, maybe 100, right? And once you get the phone calls dialed and you're starting to get traction there and you're doing deals, then go to direct mail. Because in direct mail, you really need your message to be right. You only have a couple seconds from the time they pick up that postcard to the time that goes in the trash. That's still a better impression than any online ad, because the online ad flicks by like this super fast. That postcard, they actually have to pick it up, look at it, put it in the trash. That's a really solid impression and it's worth every penny. But ideally you work your way up. And at the end of the day, the list is important, but what you say is whether or not you're going to get deals and how you handle that person's objections. And a lot of my investor customers, especially the new ones, don't understand they're in sales because they're like, well, I'm buying property. I'm not selling property, but you are selling that you are the best person for them to sell the property to, right? Because they have choices. They can list it on the MLS. They can sell to another investor, right? They have lots of options of where they sell that property. And so you are selling. And so it does, the folks that are, every time I talk to a successful investor, very rare that they started by doing direct mail. Usually they started knocking on doors, making phone calls, getting their message right. You can start with direct mail. You're going to waste more money because it's expensive. And what you need to do there is constantly test new messaging. So pick a list. Let's say there's 500 on your list. You got to just keep messaging and trying different messages and trying different things. And you'll find it's still this trial and error that led to success. Every once in a while, you find somebody that hit the right market, used some template postcard and got super lucky, but I wouldn't count on it.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. That's really good feedback. And I was just kind of thinking of how I'm going to do it, right? Obviously, I'm on the West Coast, I'm on the East Coast. So really, I think the phone is going to be I have to make the calls in the beginning and really kind of, I already kind of have what I'm going to say because I'm hyper focused on people that have portfolios and the messaging I need to say to be clear to them. So that, hi, my name is Beau. I see that you have four plexes in the area and I'm looking to purchase. I own some other properties in the area and I don't know if you're looking to sell right now. Just kind of build on that and see what the messaging is going to look like. But at the end of the day, it's not going to be easy. You still have to put in the work. It's not there's no magic potion, but I mean, I look at it when there was no data. I mean, how did people make money? It was a lot more challenging because now it's at your fingertips and your system, you can go in and I could send postcards and stuff right through PropertyRadar now. Like it's all integrated.
Yeah, we do have, it's a third party express copy for postcards, but it's really easy to export it and use any, Yellow Letters HQ in San Diego. There's a bunch, that you can also send mail through. So because we largely work with the bigger investors, a lot of times there are services out there that compete with us that build in a lot of templates and a lot of, things where they'll just do it for you. We haven't put the time and energy into that as much because the large investors really do tailor and craft their messages. They have their own vendor networks already. They're using, they're having their own systems. So one thing that we do that nobody else in the business that I know of does is we integrate with, like, Print Genie is a good tool that they do print, SMS, email, right? We integrate with Lob and Postcard Mania and the handwritten postcard folks like Addressable. So we integrate with over 2,000 applications. You can have data from us feed Salesforce or feed your Mojo dialer for calling or whatever. So a lot of our folks have larger systems, and so we've specialized more in that and helping people scale up.
Yeah, no, I like that. That's good because I can integrate with any provider I want out of the 2,000. And there's going to be, if I want to do SMS, which I think could be pretty good to do.
Voicemail drop.
Ringless or voicemail drops would be good. And so, so I'm actually going to do this and like focus on one little niche. I think a lot of people, they hear all this stuff and they go, oh, I'm going to do this. But it's really like, you got to like start with the basics and then, test it, right? And see what kind of results you're getting. And a lot of people, like they want to do it, but they won't actually spend the time. Like I hired a telemarketer, but I had never made the sales call, what the product we were trying to sell. And we didn't have the messaging right, kind of going back to what you said. So like,
Absolutely.
I wasted not that much money, but I probably wasted $1,500 paying hourly. And it's like, okay, like I'm not going to do that again. You have to get the messaging right. And like, unless you have done it yourself, then you probably shouldn't outsource it. So you should, do it yourself first and really learn it and figure out. But then once the system works, it's easier to scale because you can move the target. I'm going to do all of Pennsylvania now. And I know if I spend $2,000 in mailings, I'm going to get 30 leads and I'm going to close 2 of them and I'm going to make X amount of dollars. So I get that whole concept and it's really good. We do have,
systems are how you scale. That's what you're describing. It's a system at the end of the day, right? And now, if you have no money and no ability, like you can just pull a list in our system or start driving for dollars and look for boarded up houses and reach out to owners and you can make money. Like you don't have to put in place big systems and you don't have to have Salesforce and all that stuff to make good money. But if you want to scale up, we're there for that too.
Yeah, no, that's great. And so you don't think foreclosure radar is going to come back soon, meaning like where there's going to be a high level of foreclosures anytime. But at some point it might roll back out because of the need of foreclosure radar, right?
So we did actually bring back the Foreclosure Radar brand. So if you go to foreclosureradar.com, that's there. And we have 2 specialty foreclosure only products, right? So one is a foreclosure search product just called Search. And then the other is trustee sale tracking, which is still used by a lot of folks. We estimate like just in California alone, there's about $5 million a month of profit coming out of the trustee sales. Now, that's we're right around 250 sales a month to third-party investors. At the peak of the foreclosure crisis, that was 4,700. So, I mean, it's nothing in comparison to what it was back in the crisis, but, there's a handful of folks making a good living buying at the trustee sales. We definitely still have folks knocking on doors pre-foreclosure. The volumes are way down. It doesn't support as many people as it did in 2010, but that's an active part of our business for sure. Our newer product, PropertyRadar, still has foreclosures in it. It costs a little more because it has everything in it, and it has a lot more features. But Foreclosure Radar is still there. Now at 250 sales to third parties a month, this is about the same volume as when I first entered the foreclosure business in the kind of early 2000s before the crisis. That was about how many foreclosures there were a month. It dropped down lower through the moratoriums for sure. But right now, I think the lowest month was 24 sales to third parties in 1 month. But at 250, We're not quite back to where we were pre-pandemic, which was about 350, 400 a month. I'm just using California as an example. But there's some volume there, and it is increasing. And I do expect, some folks that got hurt through the pandemic, a lot of people lost their lives, a lot of people lost their businesses. There was a lot of, despite all the stimulus that went out into the market that really buoyed everything up, there was people that were hurt. And we're going to see some foreclosures, unfortunately, as a result.
Okay, the last question for the day, because I'm going to do a follow-up with Aaron, and we're going to dive into more of this later, because I know people that are going to hear this episode are going to be like, okay, I really need to start doing something. I can't rely on let's just call and wait till something falls on my lap. We got to be proactive. But what's an interesting kind of add on, or if you can, I know what's an interesting service you might see or technology that you're going to build into PropertyRadar in the future that might be, I don't know if you could talk about it, but anything that is in the horizon or big picture down the road?
Oh my gosh, I have such a huge roadmap of new stuff, new data, new features. I got some stuff that's going to blow folks' minds. I guess I'd be willing to pre-announce the next feature we'll be rolling out is import, where you can import lists of properties or people. And we've taken a little different approach to it to anybody else, so it's going to be a little more powerful than anything you've seen before. So we'll never have every list, right? So right now, I haven't gone down the path of probate. I think looking up people after reading obituaries, looking them up in PropertyRadar is actually a better way to go. But there are people who specialize in probate, and there's good probate lists out there. But those good probate lists are shitty at everything else. They have very poor property information. They don't have mobile tools for taking photos and notes. And so we've got some of the top probate investors in the US that use our platform, even though we don't have probate data. And what they do is they pay VAs to take those probate lists and put them into PropertyRadar so that they can manage everything inside of PropertyRadar. And so we're going to make that easier for them, and so they don't have to pay a VA to import the data anymore. So that's coming probably April.
And you have a podcast that people can go to on your website. And do you often interview people that are users, and they talk a little bit about how they're using your software for success? Because that would be kind of pretty interesting to kind of listen to those calls, and I think I would get a lot out of that, and I know the listeners and viewers would too.
Yeah, Aaron and I are actually talking. We paused the podcast because, as you may know, Aaron was diagnosed with cancer, and he's had to scale back his time. And putting on a podcast every week is a lot of work and stress and the rest, and that wasn't the best thing. And so it's paused right now. I don't remember how many episodes. We got a lot of episodes. Some of them are users, like you talked about, but there's also folks like Spencer Rathkoff and the chief economist of Fannie Mae. And, so it's Spencer Rathkoff is one of the founders of Zillow, right? And CEO of Zillow for a long time. So it's a wide variety of folks that are in those episodes, but definitely some in there, and you can kind of pick and choose. Some are users and active investors and have very practical. Man, I learned some stuff. One was targeting folks who have reverse mortgages about 6 or 7 years in, because you think, oh, reverse mortgage, that person's getting a steady stream of payments. A lot of people take a reverse mortgage where they get a lump sum of cash, and then they go blow that cash, and then they get themselves in a point where they can't keep the house. So it was an interesting one that I'd never heard of before.
Oh, what's interesting? You just brought something up. I interviewed this guy named Chad Corbett. He's a probate guy, and he said he was buying when there's the reverse mortgages, because when there's the death, the loan usually, a lot of times it goes into foreclosure. So he chases those type of deals, and so we can pull that data with your software. And yeah, he said, because like the heirs of the property, like they're going to lose it. And oftentimes he can create a win-win situation. He can say, hey, we can do like a joint venture, or however he structures them. But yeah, there's really a lot of ways to do it. And so that's exciting. And really appreciate you joining us on the show. And this will be shown to a lot of people. And then we strip the audio, it goes out to a lot of people. And I really enjoyed it, and haven't heard you in a couple months, or actually a couple years. But when I was in the Bay Area, you were at like every event, and I would always listen to you. And you're like, I put you and Bruce Norris on the pedestals of people to listen to as far as like what's going on in the world, right? Yeah, I remember in 2005, Bruce Norris said you should sell your real estate, and he was like doing all this stuff. And of course, I was in my 20s and I didn't listen. And then 2007 came, and I was like, that was like a bloodbath for me. And then I actually used to own a house in Incline Village. I bought it in 2009.
Oh, wow.
We opened a mortgage company there, and Incline Village is where it's super expensive, right? And I bought this house. It was like two blocks from the water. I bought it in 2000. I think it was 2005 or 6. I bought the property for like $620,000. And then when the downturn happened, I had moved down to Reno, and I sold it because it had equity in it and I couldn't afford it. And one of my old business partners sent me a text, and he did a screen capture of the house. It's worth like $3 million right now. And I'm like, it's like, ugh. I think you kick yourself sometimes in this business. And I look at all the houses I flipped when I was in the Bay Area, and I'm like, why did I flip these houses? I should have just put tenants in them.
Kept them all.
I know. Yeah, it's just crazy. But anyway,
woulda, shoulda, couldas.
Yeah,
we're doing well.
Yeah, that's right. It's fun, and it's ever you learn, you keep on learning, and so forth. But I really loved our conversation today, and I'm actually going to sign up and start doing direct marketing, because I have this whole idea of this 2 and 4 unit properties. A lot of people like to buy big properties, but I have a philosophy now that prices are going to be so expensive that house hacking is going to be the only way these newer home buyers going to be able to get their first property. So I want to buy every 2 to 4 unit, hopefully with separate meters, out there in these type of kind of like the entry level price point markets, Midwest and East Coast type of markets, where you can buy stuff for $100,000, $50,000 a door. So that's my thesis right now, and I just can keep on doing that over and over again until I get bored of it. But anyway, thank you for your time, and hopefully we can have you back on the show at some point.
For sure. Thanks for having me. Thanks, Al.